Hello and welcome back to NDTV Profit. This is Mika Barve and you're currently watching a special show focused on the 3 IPOs that made their debut on exchanges today. Now, the big story is the blockbuster listing of Bajaj Housing Finance. We will also discuss Cross and Tollens Tire and bring you all the details about these 3 companies over the next half an hour. Now, the primary market is abuzz this week with 7 new IPOs and 13 new listings, and the largest one being Bajaj Housing Finance. The IPO saw a record subscription and listed at a 150 rupees a piece at a premium of 114% over its issue price of 70 rupees per share. Now, after the stellar listing, Sanjeev Bajaj spoke to NDTV Profit and said that he sees a 12 to 15% credit growth in the housing finance industry and that investors should expect high quality growth for Bajaj Housing. Here's a slice of that conversation.
We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort. Shareholders should expect a business that grows with high quality, a high level of corporate governance, that brings the right blend of technology in this particular business, and sustained growth with high focus on quality of the business and a diversified book is what we look forward to building.
Atul Jain from Bajaj Housing Finance also shared his views on the potential rate cuts. Now, he highlighted that Bajaj Housing Finance would welcome lower rates as they could enhance their lending capabilities and improve financial conditions.
रेपो रेट का बढ़ना और घटना पूरे कंट्री के मैक्रो से रहता है और कॉस्ट ऑफ फंड्स और बैंकिंग सिस्टम का जो प्राइसिंग रहता है, जो हमको लोन मिलते हैं या जो हम आगे लोन दे पाते हैं, वो इससे लिंक रहते हैं. आज का जो भी डिमांड रहता है, जैसे मैंने पिछले वाले क्वेश्चन में भी बोला था, क्योंकि हमारा जो एसेट साइड है वो भी वेरिएबल होता है, जो हमारी कॉस्ट ऑफ फंड से लिंक होता है, और कस्टमर्स को भी जो घर बनाता है, क्योंकि वो लॉन्ग टर्म कमिटमेंट है, उनको मालूम है कि थ्रू द साइकिल कभी रेट ऊपर जाते हैं और नीचे जाते हैं, और क्योंकि रेट लिंक होते हैं, जैसे रेट ऊपर जाता है नीचे जाता है, इसका हमने डिमांड पे बहुत ज़्यादा अंतर पड़ते नहीं देखा है. और ऐसा ही, और अभी वैसे भी जो जितना हम सुन रहे हैं या पढ़ रहे हैं, उसके हिसाब से तो अभी रेट आने वाले समय में, कुछ समय में जब भी होगा तो नीचे ही जाने की आशा है और ऊपर जाने की तो आशा नहीं है.
Let's now focus on a parameter that domestic markets do look closely at, and those are valuations. We're talking about the valuations of Bajaj Housing Finance. And joining us is Harsh Satya. Harsh, let me start off by asking you, how do the company's valuations compare with its peers?
Well, first off, Mika, valuations looking starkly different from where they were today morning. You were seeing sub 3 times price to book, at least 1 year forward when you're looking at the numbers. At the start of trade, of course, at 70 rupees a share, but now that it's listed at 150 rupees, first off, there's a lot of liquidity, which is around 2.95 lakh crore, which has been released as a result of all the oversubscription that's happened as part of the IPO. So, of course, refunds initiated on Friday likely has already hit investor bank accounts. The impact was already felt on Friday. But now, just with regard to the valuations themselves, currently, of course, at 165 rupees a piece, all of this starts to look far lower. But currently, at around 150, it was priced, which was at open, it was at 6.1 times price to book. At 160, it's looking even steeper, 6.5 times price to book to almost 7 times price to book is where the number for Bajaj Housing looks like. At listing price, of course, it's at 6.1 times price to book, which we just spoke about. But let's talk about some of the other housing financiers. Aavas, Aptus, Aadhar, PNB Housing. That's how they stack up in the 1 year forward price to book multiple. And with regard to overall, you're looking at Bajaj Housing having a far more pacier growth than some of the other names on that list. So it's a little bit of both profitability as well as growth. Bajaj Housing trumps the others, but just in terms of valuations, it's almost 2x in terms of relative price to book valuations.
Got it, Harsh. And while we have you with us, could you also tell us the number of shares that are actually available for trading today, and when will more shares be available in the market?
Absolutely, Meka. So it's all about demand and supply, right? That's what our markets are about. And to give context, 89% of the shareholding of Bajaj Housing still largely sits with the Bajaj Group, which is Bajaj Finance alone. And therefore, just about 11% has been divested as of today, which is post money, post the issue of fresh equity. 11.25% is currently sitting as in hands of groups outside Bajaj. So currently, out of that as well, a large component is locked in by institutions, anchor book, etc. And therefore, the publicly available shares for trading is just about 6.5% of the total share capital of the company. So very, very thin in terms of supply. Out of this as well, given the kind of commentary coming, given the kind of bullishness with regard to how analysts are viewing the IPO, it's very likely that at least 50% plus of those owning these shares will likely not be putting them up for sale either. They'll probably be holding it for the medium to long term. And as per SEBI data, around 50% of investors sell on listing day, which likely leads less than 3% in this case, given the kind of traction that we've seen and the kind of commentary coming from analysts, just about 3% of the shareholding up for sale. And therefore, you likely are seeing a supply crunch in the market, given the fact that this is how it's playing out. Now, in terms of what to look for additional supply, 12th of October, 1.5% of the paid up equity comes on sale because the first anchor book opens, which is roughly 1.5% of the cumulative share capital of the company. So that's a large chunk. That's half of what is available today in terms of supply, which we just computed. On the 11th of December, another 1.5% comes on stream. So a full 3% by the 11th of December is available for anchors as well as other investors to sell. Not sure how much of that will come, but nonetheless, it will create more supply in the market. And that's likely to give further traction in terms of price action on the stock.
Thank you so much, Harsh. This is a key factor that we do have to look at, because you see it in the IPO markets that because of a crunch in supply, you see the stocks moving up. So it'll be key to see what the deliveries of the counter stand for the next few days. But Harsh also caught up with Jignesh Shayal, who's the Director of Research and Head of the BFSI sector at InCred Capital. Now, he spoke about the bumper listing of Bajaj Housing Finance. Listen into a part of that conversation.
Obviously, we have been liking the stock, considering they have done pretty well in the last 3 years and last 3 to 5 years altogether, 91,000 crores kind of an AUM, and they have the right mix of AUM and all, and has an ability to grow also quite in a similar kind of a way. Obviously, there had been liking for such names where there is a pretty strong promoter background. Along with that, the quality of growth is pretty good, and the compounding valuation, I mean, the growth is also compounding in nature. Obviously, people are going to like it up. It's a little bit stretched for a while. I think listing a lot of people are right now in the kind of a happy mood right now. Gradually, we think there could be some consolidation or correction is likely, but over a mid to long term period of time, we continue to like this name. I think they will do quite better, just like the parrot.
All right, Mr. Jignesh, for a lot of people, like us who have not actually gotten the privilege of getting the IPO allotment, do you think it's the right time to buy Bajaj Housing Finance?
Look, I mean, as you guys rightly pointed out, being a housing finance company with mid-teens kind of an ROEs and 2% kind of an ROA, doing 6.5 times, it's little stretched kind of a valuation. But as I said, there could be some in the near term. There could be some consolidation or correction might be possible purely based on valuation. But if somebody is looking for mid to long term kind of an horizon, I think it's pretty good story to opt for, because housing finance is a safe asset. The management is pretty good, and growth seems to be in a pretty good shape, at least for now, at least for the next couple of years.
Got it. Jignesh, let me talk specifics. Growth.
Yeah.
Till FY24, the company has clocked an AUM CAGR of 72%, which is just phenomenal for the kind of base that it has. Continues to do almost 35% AUM growth. Do you believe a 30 to 35% kind of CAGR over the next 3 years is something you would pencil in as an analyst?
Yeah, sure. I mean, if you see housing finance I mean, mortgages is a pretty big market, and Bajaj at 91,000 crores still remains a pretty smaller player out of it. They have a reach. They are able to, reach to deeper pockets, I mean, deeper geographies altogether. And they have that kind of networking as well as, deep pockets to, manage that kind of growth. So still doing 30-35% kind of a growth at 91,000 crores kind of an AUM is still pretty much likelihood possibility for somebody who is, for next 3 to 5 years, if somebody is looking at it. I think doubling the balance sheet is also not something pretty much impossible kind of a task. It's quite likely that they will be able to manage it up the way how they have a reach as well as the strong balance sheet.
Right. So essentially, they will double up every 2 years because they'll compound at 35%.
I think 3.5 years is more likely.
Okay.
So I'll be giving it somewhere between 30% kind of a number. So
Got it.
Roughly around 3 years is something which is quite likely.
Okay, understood. I get your metric. Okay, and just as they go about doubling, right? So maybe 25 to 30% kind of growth is what you're ascribing. Maybe if they double in 3 years, likely. What's the kind of operational efficiency which starts to kick through? Because essentially what's happening is your ROAs have expanded on a consistent basis. They are on an improving trajectory over the last 3 to 4 years. Do you believe that ROAs can breach the 3% or even 4% mark, which a lot of housing financiers, at least the smaller ones, more efficient ones, are doing?
Rather than purely efficiency, the smaller affordable guys basically has a relatively better spread or a relatively big larger spreads. They make it up because they are into a kind of more into affordable segment side or riskier segment side altogether. Bajaj, I think, is far more conservative in that particular space. They have a much more balanced mix, with having, I think, 56-57% of housing, a bit of a lap, LRDs as well as corporate. I think they will be more aspire to do a kind of mid to premium housing altogether rather than going completely tilted towards affordable one. So very margin will be more or less in the similar range what they used to make it up. Will be more similar to large banks or large NBFCs rather than affordable pure affordable housing finance companies. The operating leverage can still kick in over a period of time because HDFC had one of the finest models as far as OPEX was concerned. They used to do cost to income in the single digit itself. Bajaj has a long way to go, but I think operating leverage can be a big trigger which can play out over a period of time once the company achieves a kind of a size. Margin trajectory, I think, should remain more or less similar because they are quite competitive with large private sector banks and PSU banks like SBI and all. So I think in that particular concept, I think margin expansion would be fairly limited. So I think from 2.1, I think reaching towards, aiming to reach towards 2.5 or 3 would be far more interesting thing to watch out for. But crossing 2.5 or 3 and reaching to 4, I think that would be a little difficult task to do, at least considering the kind of asset mix they have right now.
Well, here's another view on Bajaj Housing Finance from Shweta Daptardar, who is the Vice President of the BFSI segment of Elara Securities.
We certainly believe that this space is here to sustain. And there are 2-3 reasons if I could enlist here. One being the deep marketing strategy and penetration, especially in the non-home loans front. So be it LRD portfolio, be it developer finance portfolio. So BHFL is poised to go deeper markets, tap both internal as well as external sourcing through the enablers, through connectors, through their digital platforms, which they'll be banking upon. So there is a lot of scope there for increasing the AUM base right from the sourcing per se. Second, if you look at the entire entrenchment, so like I said, a diversified portfolio mix with a strong presence pan-India. So BHFL today operates out of 20 odd states in the country with a diversified mix. So as even Sanjeev Bajaj and Atul pointed out there, affordable housing finance market as we speak is 11 trillion odd loan market today, which is another segment which we believe Bajaj Housing Finance can do a lot of work there given the kind of risk strategy and the kind of inheritance they have in terms of risk management policies. So affordable housing finance space is going to be the second biggest trigger in terms of product diversification for Bajaj Housing Finance. And last but not the least, the execution. So look at the team. Atul Jain has been around for a good number of years. The entire executionary team and the kind of omnipresent strategy, which even I highlighted earlier, by which they are banking upon the digital platforms, digital sourcing platforms, and this coupled with physical branch network, which is highly penetrated. I think that will be the third biggest trigger. So we certainly believe 25 to 30% AUM CAGR stands imminent for next 2 to 3 years for Bajaj Housing Finance.
We also had Vinay Jaisingh, who's the MD and co-head of Portfolio Management Services at JM Financial. Now, he said that he's very bullish on Bajaj Housing Finance stock, and take a look on that slice of conversation.
Last time you asked me this question about how much money our mutual funds are sitting with. That number a month ago was about 1.25 lakh crores to 1.5 lakh crores. It's now at 1.9 lakh crores, or about 6% of the overall AUM. So it's proving to you, if there's a good quality paper, good management, great business strength, you will start seeing the IPO listing well, and I think that's what's happened. The brand is fantastic, to say the least. And just on the housing space for a minute, it's very interesting. If we got one thing positive in this budget, which the government came out in for FY 2024-25, it was the housing space. Please remember, PMAY, or housing, affordable housing, has been pushed pretty much by the government. That is the single most important core area for them. So Bajaj Housing may not be fitting into it, but the housing area is growing between 12 to 15% per annum.
Astha Jan of Hem Securities, on the other hand, offers a word of caution. Now, those who haven't gotten lucky in the IPO should wait before buying, she says. Listen into that conversation.
So my idea here is not to accumulate at this point because it is commanding a strong premium. It is currently trading at 159. So my idea is just those who didn't get any allotment, they can apply. They can now buy the shares. Now it is a secondary market listed already, we can say. So they can buy the shares. Later on when the price comes somewhere near to 120, 125 zone. But here it is really highly priced because now it is commanding the price to book multiple of more than 6 times, 5 to 6 times. So which seems to be high. So accumulation is right strategy, but not at this point of time. Maybe at 125 or 130 rupees, the stock is well placed to get more, into your portfolio. So right now, stay away from the stock. Let the stock fall till those level and then make a fresh entry. This is what we are recommending.
Let's now shift our focus to another counter that made its debut on the Dalal Street today, and that is Cross. Now, it listed at 240 rupees per share on the NSE, in line with its issue price. Now, NDTV Profit's Puneet Zaveri spoke to Cross management about their exceptional performance in the recent past.
We have had excellent growth in the past 3 years. And of course, the trailer axle and suspension segment has been one of the major catalysts for this growth. But nevertheless, even the component business has also grown over the years, over these past 3 years. But to take things forward, the trailer segment along with the suspension is a very fast growing segment in the M&HCV space. And we just happen to be in it at the right time. Going forward, we expect even better growth. This is because of the shift from rigid vehicles to prime movers, which is being witnessed by the OEMs. It is the fleet owners prefer a prime mover than having a rigid vehicle. So this has been one of the growth engines in the M&HCV segment, and we think that it's going to be there for the next many years more.
Now, before I come back, to the trailer segment in detail, I wanted to just, get on the new capex of the company of about 70 odd crores. Now, that specifically you mentioned in the previous conversation for an extrusion plant. Just talk to us the importance of this capex that you're doing specifically for this, because you mentioned that it's not been done by anyone in the country. What's the special aspect of this particular investment that you've done, or going to do actually from this IPO?
Yeah, so there is a point where you can, competitively price your product to get better market presence. But beyond that, you need to have technological drivers. And we want to bring in what the world uses for the trailer axles. That is an extruded beam instead of the fabricated beam which is being done currently in India by all the other players. So about 30 crores from our proceeds of the IPO will go towards this extrusion plant. And other than this, there are other areas also which we are investing in, especially for our export customers, to increase our forging capacity, to add a new foundry line. So all this adds up to the 70 crores which you just mentioned. But as far as the extrusion plant, yes, we feel it's going to be a game changer in the trailer axle and suspension segment. So we'll be lucky to be the first people to have it with us. And it is more cost effective, of course. And it is stronger, cost effective, and lighter in weight. So it will be a winner, and not only that, this has been already checked and tested by the Indian industry, by the trailer industry. So it will not be difficult to penetrate into the market with this new technology.
The third company that listed today was tire maker Tollens. Now my colleague Sajid Mangat spoke with the management to find out what their plans for the future look like. Do listen to a piece of that conversation.
I would like to wholeheartedly take this platform to express my gratitude for 55,631 new family members in the form of stakeholders of the company. And it is our job to ensure that we create wealth for them with our sustained and consistent performance, the pillars for which is already ready. And there are three pillars I would probably put as the basic issues with regard to which the businesses will grow, especially in a tire industry like us. The first pillar being the capacity expansion and the installed capacity being put at a level by which 3 to 4 years we don't need any capex to take care, which is what we had taken care of by 2023. The second pillar is going to be the augmenting the working capital management in time, and the successfulness of the IPO will ensure that we have enough money and resources at our disposal, that the second pillar of working capital management is beautifully taken care. The third thing would be the technology, the innovation, and the process of cost efficiency that we bring into our operation. By bringing in two wholly owned subsidiaries, one in India as well as one in Ras Al Khaimah in UAE, we have ensured that all the three pillars have been kept in place. 2024 saw a very huge stride in terms of revenue as well as in the EBITDA and PAT. I am extremely confident that with our plans to increase the capacity utilization and also penetrate newer markets, we will be keeping pace with the same level of growth in the futuristic years as well. The opportunity is huge. Post-COVID, there has been a huge aggression and demand in favor of the suppliers, and even the cost dynamics of raw material is being passed down, which is a very good sign. And the positioning that Tollens Tires has taken, I think it's all augmenting extremely well, both from the employees, companies, and the stakeholders' point of view.
Let's now take a look at how Bajaj Housing Finance fares against the other big IPOs, and we have Rucha joining us to give the key details on that.
Thanks. So starting off with Bajaj Housing Finance, now this one has kicked off today in the stock markets and has listed at around 114% premium, which is quickly giving you a brief about the issue. The issue price was set at around 66 to 70 per share, and the issue size was about 6560 crore rupees, and this was subscribed at about more than 63.5 times. But then we'll see how are the other large IPOs doing. Now we have analyzed top 5 IPOs on the basis of the issue size, and LIC tops the list, which had an issue size of about 21,000 20,000 crore rupees, was oversubscribed by about 3 times. But then we look at the listing gains. Now, this one listed at a discount of about 9% and had also shared about 35% of its return just within a year. Now, this is also followed by the likes of Paytm, Vodafone, Coal India, Yes Bank, and which had issue size of around 20,000 crore rupees is what we can look out over here. But if we can move on to the next slide, we'll see that the gains which these have given are not really positive, which would, you know, make the investors really happy about it. For example, likes of Paytm, which was a 18,300 crore of issue, got listed at around 9% discount and shared about 70% returns just within 1 year of its listing. So large IPOs, as frenzy as it can be, returns are not really what made investors happy. Talking about Coal India, listed at decent premium of about 20% over its issue price, but again gave around muted return of about 12% within a year. But then if we can move on, we'll also check the absolute and the CAGR, that is the compounded annual growth rate return, which these top 5 IPOs have given. Well, absolute return around 19% since its listing. So this one is the returns since its listing, and CAGR, that is compounded annual growth rate of about 9%. Really not a big number that was expected from a big name like LIC. Again, Paytm, both returns negative, even absolute and the CAGR. So these large IPOs were really hyped around their listing, but not given really good returns. But we'll see what Bajaj Housing will have to give us within 1 year of its listing.